So if bulls and bears have you totally confused, don't worry, you're in the right spot.
First up, let's lock down the absolute basics. This is pretty much your starting map. Basically, owning a stock just means you own a tiny piece of a company, like Apple or Google.
Think of an exchange as a huge auction house for company shares, like the New York Stock Exchange.
You actually need a broker to get into the stock exchange. Nowadays, they're mostly just online platforms.
Okay, now for the fun part. We're going to talk about the market's overall vibe or mood.
This gets its name from a bull's horns thrusting up. It's all about market confidence. And a bear? Well, it attacks by swiping its paws down. This means widespread pessimism.
So, super simple. Bulls are optimistic, prices go up. Bears are pessimistic, prices go down.
All right, let's switch gears. How do investors actually figure out a company's size and value? It's a really quick way to see how big a company is. Just multiply stock price by total shares.
And you can really see the massive difference in scale between established giants and tiny, riskier companies. These are the household names, right? They've got a long history of being solid and reliable.
This ratio helps you figure out if a stock is over or undervalued. But, it's not foolproof.
Okay, let's look at the actual tools and strategies you might use. This is your personal investment kit.
So your portfolio is just your personal collection of stocks, bonds, and other assets. Diversification is key. A healthy portfolio could look something like this, a good mix of different investment types. ETFs are super popular. They're an easy way to instantly diversify by buying a bunch of stocks at once. Here, you've got two totally opposite strategies. You can either bet on a stock's success or its failure.
And finally, let's get into some of the wild slang you'll hear online. This is where it gets really fun.
So when you see those rocket emojis, it means people hope a stock's price is going to just skyrocket.
Yeah, this phrase is pretty grim. It describes a temporary recovery right after a huge price drop. This one's a classic scam. They artificially pump up the price and then sell, leaving everyone else with losses. So, you've translated the jargon. The language of Wall Street is now a little less foreign, right?